Hello everyone, this is Arman. I'm happy to see you all in another video. Actually, this is the follow-up video to the weekly forecast video which I shared with you on 3rd of February, that is on Tuesday. And in this video, let's see how the fundamental news events that were released this week affected the market. And also let's see the follow-up of AUDUSD forecast and EURJPY forecast which I shared with you. So before we begin now, please note that trading forex and CFDs involves a high level of risk and may not be suitable for all investors. The analysis and opinions shared in this video are for educational purposes only and do not contribute financial advice. Past performance is not indicative of future results, so always manage your risk carefully and trade responsibly. First, let's see the follow-up of the news events that released this week, and let's see how it affected the market. So on Tuesday, we kicked off the week with U.S. domestic vehicle sales. Auto sales offered an early rate on consumer demand and discretionary spending. The data helped frame expectations for growth, influencing risk sentiment in equities and setting the tone for the bigger labor and inflation releases later in the week. So on Wednesday, actually Wednesday was the first volatility pocket of this week. The ADP Employment Report gave traders an early signal on private sector hiring ahead of Friday's official jobs numbers, driving positioning in USD pairs. At the same time, the ISM non-manufacturing index provided insight into the health of US services sector. Actually, it's a key growth engine. Any surprise here typically feeds straight into equity sentiment and bond yields. In Europe, actually, Eurozone CPI shaped expectations around ECB policy, moving Europe as traders reassess the inflation path. Together, these releases set the midweek tone and drove cross assets volatility. Thursday was all about central banks. The Bank of England meeting influenced GBP volatility, with markets reacting to the tone around inflation risks and growth trade-offs. The ECB meeting was another key catalyst for euro crosses and European equities as traders passed forward guidance for clues on the policy path. Then, alongside this, we had Eurozone retail sales. Actually, this offered a read on consumer demand, helping investors gauge the resilience of European growth. The combination of policy signals and consumption data led to choppy price action in euro and GBP pairs. Friday, today is the headline day. Actually, the US employment report drove the biggest moves of the week, with the markets reacting to job creation and unemployment rate. This translated into volatility across USD pairs, gold, equity indices, and bond yields as rate expectations were repriced. At the same time, University of Michigan consumer sentiment provided fresh read on household confidence influencing near-term risk appetite. Then we had US consumer credit. Actually, this added context on borrowing and spending trends, while Canada's employment report drove CAT pass. So these were the news releases that influenced the market this week. Now let's see the follow-up of AUD forecast and EURJPY forecast. So on AUD on the weekly chart, the price broke above the most recent downtrend line, and also it broke above the last high. So the bulls were on control on the weekly chart, and on the daily chart too, we had evidences supporting the bullish view, with the price and MACD creating higher highs. So the bulls were on the run here. And on the H4 chart, I was expecting pullbacks and potential continuation higher from the marked, key support zones. Let's see how the market has developed now. So on the H4 chart, the pullback that I was looking for is happening, and price is currently floating around the first key support zone. My plan still remains the same here. That is, until both the key support zones hold, my view still remains bullish here, and I expect the price to move higher further. So now let's take a look at the EURJPY forecast and see how it has developed now. On the daily chart, we had a bearish divergence in play. Uh, Actually, the price action has created higher highs, whereas the MACD indicator has created lower highs, so which is an evidence favoring the bears. And moving down to the daily chart, we had the most recent uptrend line breakout, and also the price has created the lower lows for the first time in a while. Actually, it was in a bullish structure, creating higher highs, higher lows. Now it has shifted and has created lower lows for the first time in a while. And MACD indicator also supports this by creating lower lows on the MACD. So the bears were in control here. And on the H1 chart, we had a strong bearish move followed by a pullback, and the price was holding in the first key resistance zone. So my plan here was to sell the rallies until both the strong resistance zones marked in yellow holds. Let's see how it has developed now. Uh, Actually, the price is pretty much around the zones, I mean the resistance zones that I have marked. So the plan still remains the same here until both the key resistance zones hold. I expect bearish continuation in the short term. So that's all for this week. Hope you had a wonderful trading week. Until I see you in the next video, it's Arvind Akash signing off. Cheers. Have a great weekend. Bye.